Investor sentiment is looking more steady on Monday, but investors remain cautious as investors await further developments in trade talks between the US and China. Markets are also further digesting the surprisingly weak US jobs data released on Friday. Headline US job growth hit the brakes in February, registering the smallest gain since September 2017 and the third smallest during the unprecedented run of 101 consecutive months of payrolls gains. Total non-farm payroll employment changed little in February by an increase of 20,000, and the unemployment rate declined to 3.8%. The unemployment rate declined by 0.2 percentage point to 3.8% in February, and the number of unemployed persons decreased by 300,000 to 6.2 million. While job growth was weak, average hourly earnings rose 11 cents, or 0.4%, raising the annual increase to 3.4%, the biggest gain since April of 2009. Fed Chair Jerome Powell said on Friday that the central bank will be careful not to shock financial markets as it stabilizes its bond portfolio, saying that it does not see problems with the U.S. economy that warrant an immediate change to its policy. Asian shares struggled for traction on Monday after U.S. employment data raised doubts about the strength of a global economy. Nevertheless, the positive sentiment prevailed due to speculations over a temporary nature of the decline in the jobs numbers, while the country's job market remains healthy and strong. Besides, China's central bank on Sunday pledged to further support the slowing economy by spurring loans and lowering borrowing costs. Also, a senior Chinese official said over the weekend that China and the United States are still working day and night to achieve a trade deal, keeping alive hopes for an agreement to eliminate tariffs. In Europe, shares recovered on Monday with a merger talk, lifting the battered banking sector and helping offset worries over a slowdown in the global economy. German lender Commerzbank was among the biggest gainers of the SOX 600, up over 4% amid the reports of a possible tie-up with Deutsche Bank, which also rose nearly 2%. According to speculations, the management board of Deutsche has agreed to hold talks with Commerzbank on the feasibility of a merger. In the currency markets, the dollar remained under some selling pressure. The pound was wobbly at around $1.2969, but since then the prices have recovered above the $1.30 mark amid weaker dollar demand and better risk sentiment. The cable dropped to a 3-week low of $1.2945 earlier on Monday amid a cautious tone by investors ahead of a crucial week in the UK's troubled political debate over EU membership, with Parliament expected to reject Prime Minister Theresa May's deal on a vote on Tuesday. If that happens, lawmakers will vote the next day on whether to leave without a deal on March 29th. If they reject that, then on Thursday they are due to a vote on a limited delay. As for the data, the advanced U.S. retail sales for January rose by 0.2% versus the 0.0% estimate, while the prior month was revised lower to negative 1.6% from a negative 1.2%. The headline number was the lowest since September of 2009. By the way, the report was delayed as a result of the 35-day government shutdown. The February report, which was scheduled for publication on Thursday, will not be released until April 1st. The dollar was nearly unfazed by mixed numbers. The euro-US dollar continued to oscillate in the mid-12,000s, extending its modest recovery after the European Central Bank turned dovish on Thursday. The ECB pledged low rates until the end of the year, announced a new funding scheme, and slashed 2019 growth forecasts. Today's German data supported the notion of a slowing down extending into 2019. Industrial output dropped by 0.9% in January against an increase that was expected. The downfall was somehow countered by an upward revision for December, but it's obvious that the region's largest economy is still struggling, which in turn pushes back the ECB rate hike expectations. On Tuesday, the US CPI data could make the euro give up its modest gains should the release reflect a more robust consumer prices growth than expected. Meanwhile, crude oil prices continue to trade in a familiar range, with Brent still clinging to the $66 figure. Saudi Arabia's oil minister said it would be too early to change OPEC Plus output policy in the group's meeting in April, which somehow cooled market expectations on the possible extension of a deal. Nevertheless, weaker dollar demand and lower drilling activity in the US support the prices in the short term. In corporate news, Boeing shares plunged on Monday as investors shifted to aggressive sales after the news that an Ethiopian Airlines flight crashed on Sunday, killing all 157 people on board. The plane used on the flight was a 737 MAX 8 jet, one of Boeing's top-selling airplanes. The accident raised concerns over the model's safety as it comes in less than 6 months after another deadly crash involving the 737 MAX 8. The additional pressure on the company's shares is due to reports that several countries, including China, grounded all flights involving the aircraft. And that is all for today. Thank you so much for watching, and don't forget to click subscribe to always be in touch with the latest market news.